Hey there, my name's Curtis Lucas and you're watching Empire Building. I know it has been a while since I've put out a video, but I really wanted to dust everything off and get back into the swing of things, especially now that there is some real movement beginning to happen in this space again. And I'm not just talking about the Bitcoin price, which as I speak, as I'm recording this, is inching ever so closer to $40,000 yet again. $40,000 is beginning to look like $10,000 used to look like when we struggled getting above that. So let that sink in for just a little bit. But as far as MAR is concerned, just this last Monday, we saw that they had announced yet another major purchase of 30,000 S19J miners from Bitmain. These new miners are scheduled to arrive between January 2022 and June 2022, which I found quite remarkable considering Riot had purchased the exact same miners back in April, and those aren't being fully delivered until I believe it's September. So how did MAR manage to have their miners delivered this much sooner, despite the fact that they placed the order much later? Well, the answer to that is simple. They paid more. For these 30,000 Antminer S19J Pro miners, they paid a total of $120.7 million. That works out to approximately $4,000 per miner. Now, by comparison, if you go back to the Riot's purchase of 42,000 S19J miners, they paid $138.5 million, which actually works out to about $3,200 or $3,300 each. So $700 less. So why would Marathon choose to pay more for these miners? Obviously to get them sooner. And as it turns out, for the $700 extra that they're paying, being able to get them that much sooner means the opportunity cost of actually having those miners that much sooner is far greater than the additional cost that they had to shell out. In other words, the longer those miners are plugged in, the more money that they're going to make. And the money that they'll make off them is far greater than the cost they had to shell out to get them faster. So you may be asking, well, why didn't Riot do that? Well, it's quite simple then again. Riot is still building out their Whinstone facility. So if those miners show up before that facility is 100% complete and ready to house those new miners, then they just wasted money, having miners sitting around still in boxes with nowhere to plug them in. These are the decisions that as CEOs they need to be able to make, and timing is everything in this business. These miners that Marathon just ordered are going to be delivered to their new Texas facility run by Compute North. Now, we don't have a whole lot of information on what these facilities will look like, but if I were to wager a guess, I would presume that they will go the container route yet again. They are much faster to put up, and that modular system means that they can accommodate new miners at a faster pace without having to build out an entire structure. Having said that, it's certainly not as majestic as the Whinstone facility that Riot is putting together. That facility truly is top notch, but as far as functional is concerned, I have to admit I've always liked the container method. It's just, let's face it, not as pretty. Now, moving on. For anyone that is curious, the original purchase that Marathon had made way back in December of 2020 for the largest purchase that they had ever made, the largest purchase Bitmain had ever received at 70,000 units. They actually paid a total of $170 million for 70,000 units, or $2,400 approximately per unit. So obviously quite a good deal. And those were not the J's, those were the S19 Pros, which actually have slightly more hash power than the J's do. 10% more, as it were. Now, aside from this, MAR also announced their production results for the month of July. And in this, I have to say I was somewhat disappointed. I was expecting to see even greater production rates than we actually got. But they did show us that there was a 66% month-over-month increase between June and July. But when you get into this, you realize that there's actually been zero increase in the number of miners actively operational. This is the exact same number and the exact same amount of hash rate that we saw at the end of June compared to the end of July. This means not a single miner was installed over the month of July. This isn't what I expected to hear. Now, they did tell us back in July that there had been experiencing some delays in those shipments. And in this update, they also state that there are currently 4,287 miners currently in transit. But here's the good news. If they're currently running 19,395 units, miners, this graph up here indicates, and I'm going to zoom in here because I actually had to take a look at this a few times. In the month of August, they're claiming that there'll be 30,120 miners active. I presume this number indicates what they expect to have installed by the end of this month, or perhaps just what they expect to have delivered. Either way, the two should be pretty close, hand in hand. If this is true, then we're expecting to see nearly 10,000, almost 11,000 miners installed over the month of August. This is going to increase their hash rate by approximately 1.18 exahash per second. That's nearly a 50% increase over what they're currently putting out. And it will nearly bring the Hardin facility in Montana to full capacity. This is what I've been waiting for some time. So it's nice to see we are very, very close. Obviously, yes, it was somewhat disappointing to hear that we didn't get more miners installed, especially during this period of decreased difficulty on the network, which is mainly responsible for the increased production that we've seen month over month. But having said all of that, they also went into detail here explaining that they actually had to have the miners down for about 5 days for maintenance. But it appears as though all that should be behind us now. But there is one other thing that has been on my mind lately, and we need to address it. One of the points that they highlight here, and as they do every single month, is the cash on hand at approximately $91.9 million, which is a significant amount of money. However, you can see from the previous month, cash on hand was approximately $170.6 million. This obviously due to the purchase. They would have had to submit a significant deposit. I believe it's usually about 50% in order to secure those miners from Bitmain. So as we know, it's going to cost money to continue to run these miners in order to pay their electricity costs and other maintenance costs. So sooner or later, they're going to have to get income from somewhere, whether that be selling Bitcoin, which they've made fairly clear they have no intention on doing, or some alternative source of income. I'd be very interested in hearing what Marathon's plan is to address this. At one point some time ago, Mariko Komodo did propose what he thought could be a solution, and that would be selling covered calls against their Bitcoin position, secured against their Bitcoin position. This is how he put it.
So companies like Mike Collier's and companies like NYDIG is our partner, and they offer the ability to you can lend that out to other people. You can become a banking institution. You can write calls against it and bring in income. The volatility in Bitcoin creates so much alpha that you're able to sell calls that are 50% out of the money for 10% of our portfolio and make enough money to pay all of our bills.
That was from some time ago, and I found that extremely insightful. But at least as of right now, I don't think that they've ever gone down that path. Hut 8, as we know, lends out their Bitcoin in order to earn a yield, and that somewhat offsets their mining costs, as well as a small amount of hosting and they're venturing into other alternative sources of income so that they can maintain their operations without having to either raise capital by diluting shares and still be able to continue their operations. Now, my own personal opinion on this is I don't necessarily have a big problem with them raising additional capital at some point so that they can maintain their HODL position, but I don't want that to be the only solution that they're looking for. I do find it very interesting that this new behavior of all the publicly traded miners and the expectation of them is that they won't be selling any of their Bitcoin anymore, because that has been the norm for quite some time. They needed to, that was their source of income, so they had to sell it in order to pay their electricity bills. Now, the thing also to point out is that now that they are at full scale, and despite what anyone else might lead you to believe, are profitable on a daily basis. If they had to start selling Bitcoin to pay for their bills, they wouldn't even have to sell everything that they're mining currently. They would be able to maintain their current HODL position and sell a portion of what they mine to pay for the electricity costs and HODL the rest. That is also feasible and sustainable, provided Bitcoin doesn't go into some prolonged, extended bear market. But considering the fact that their current cost to mine one Bitcoin is about $5,000 and it's currently trading at about $40,000, every Bitcoin, they have a surplus of $35,000. Put another way, every Bitcoin that they mine can pay for another 8 Bitcoin if they choose to sell it. So those are all my thoughts on what's been going on recently. Obviously, there's a whole lot more going on. Some of you may not know that tomorrow, actually within just about 6 or 7 hours, the Ethereum London hard fork is going to be activated. And Ethereum Improvement Proposal 1559 is going to be put into effect. Now, I've mentioned before, I actually run an Ethereum 2.0 validator node on the Beacon chain. So I've been monitoring that very closely. I have to make sure that my validator node is fully updated, and I'm going to be monitoring it as we transition into this new hard fork to make sure there aren't any problems that I might need to address. So I plan on putting a little bit of content about that and what it means going forward. Now, as much as I talk about Bitcoin, Ethereum is actually my favorite cryptocurrency. I'm even more invested in that than I am in Bitcoin as far as the actual coins are concerned. Obviously, my position in Bitcoin mining companies far exceeds that. But if you watch any of my older videos, it's pretty obvious to see that Ethereum has always been a major focus of mine. And as far as content is concerned, obviously, yes, I've been away for a little while. I mentioned I've been doing a construction project. It's occupied a great deal amount of my time, understandably. But also, I think people need to realize that there's a thing called creator burnout. That's a real thing. Putting out this content can be very, very difficult, especially when coupled with the fact that this market is as volatile as it is. Getting in front of a camera and keeping your head on straight to be able to communicate certain ideas isn't always the easiest thing to do. That and throw real life into the mix, and it's just not as easy as people think it might be. Even our friend Blonedy over at Think Like a Whale on his channel, he's been away a little while too. I've missed his videos. So if he's watching this, can't wait to see you get back behind the camera as well. I enjoy making these videos. It's not always easy, but it is a lot of fun. But if for whatever reason it's not as fun anymore, sometimes a little break is all you need. But if anybody thought I tuck-tailed and ran, certainly not the case. I'm not going anywhere. There'll be more where this came from. And I am working hard to be able to get into some sort of a routine, whatever that might be. I honestly don't know yet, but I am working hard to come up with some sort of a schedule that could be a little more reliable. Maybe that might be just one video a week. I think I can certainly manage that, even if it's only something short. And then it'll be a little bit easier just to talk about whatever events might have occurred over the past week and give some of my thoughts, share a little knowledge. And as always, remember, this isn't investment advice. I'm here to share my perspective, educate a little, and have some fun along the way. That's all for this one. Now let's get back to empire building.